Welcome back to another episode of the B2B Founder Podcast. I'm your host, Brett Trainer. I welcome to the podcast Kurt Johnson. Kurt is the co-founder and managing partner of an innovative venture builder studio called 11.2 Ventures. It's really an interesting concept. Kurt and company are taking the VC and startup space to another level. They create and build companies in-house rather than paying a premium to third-party ventures. Essentially, they're a turnkey business builder, starting at the ideation phase and building the product and infrastructure internally. It's really quite interesting. In addition to the insights on their model, Kurt and I also chat about transitions in B2B sales methods since 2012, weighing the leverage of marketing opportunities, be thinking about businesses as ecosystems, approaching of selling into an ecosystem. The B2B market is a platform, and a number of other topics around growing your B2B startup. So at the end of this, you'll see, is this the future of venture capital? Yeah, you'll have to listen to the episode and decide for yourself. Enjoy. And now on to the interview. Hey, good morning, Kurt. Welcome to the podcast.
Morning, Brett. Happy Tuesday. Thanks for having me here.
Happy Tuesday as you. One of the last, hopefully not one of the last nice fall days that we have, but it's good to have you on the program.
Thank you.
Hey, to get us started, why don't you give the audience a little bit, when did you first get involved and how did you get involved with B2B startups?
Sure. My whole career has been in business-to-business sales and serving the business community. I officially started in B2B startups in 2012, which is when I left corporate America to venture out on my own.
And the rest is history, as they say, right?
History in the making, hopefully.
Yeah, there you go. I like it, which is good. So why don't you tell the audience a little bit about what you're working on today? Because I think it's super fascinating. It'd be a great way to kind of kick off this discussion.
Sure. From a very high level, I have a venture builder studio called 11.2 Ventures, which 11.2 is the kilometers per second needed to get into orbit from sea level in 8 minutes. I've been told that you can do it more slowly, but we'll take 8 minutes for 11.2. And one of the companies that's in the 11.2 Ventures portfolio is called Perceive, which is all business-to-business sales. It's really just the culmination of what I've observed in the market as a guy carrying a bag, as well as a manager giving out quotas and trying to hit the organizational numbers.
Yeah, I mean, that's good. A couple of ways we can go with this, but first, because we kind of had that shared background of B2B sales, just curious from your perspective, 2012 is almost an eternity to go in the B2B space. So interesting your perspective on kind of what's changed, probably even the most recent, right? Where you used to be more outbound driven, right? And driving the sales process. Now, hopefully it's more reactionary. I'd love to just get your perspective on, it's almost a decade, which is hard to believe, and kind of the current state and how that's kind of transitioned recently.
I guess way back when, in 2012, salespeople did a lot of education. And I think there's three things that really have changed. One is that marketing automation took or co-opted or took over a lot of that education role for a salesperson. And so salespeople then evolved into the back end of what was arguably a longer series of activities in a sales process, very much focused on closing now deals and getting active leads from marketing. I think the second thing is, I had cut my teeth in the Chicago market, and there were a lot of buildings in Chicago that I was escorted out of.
Exactly.
And knocking on doors just isn't the way anymore to be effective as you're trying to win new customers. It really, everything has to have some tie into digital marketing, into drip campaigns, into nurturing personal lead list, not just an organizational lead list. And then I think the third thing, which really is, 2020, starting in February, is that there's almost no more knocking on doors, right? We have now had, on some levels, options taken away from us. We have to now build relationships sure, in person, but we also have to be able to build a digital relationship at a company level as well as at individual level.
Yeah, no, I think it makes sense. And, one of the things I think we talked about offline a little bit was, I think B2B was moving that way, right? Slowly, some industries faster than others. Some we've always done it this way. It'll still work this way. Pandemic's trying to change that. It kind of shut the door on the way we used to do it. And there's still, to your point, a whole area of the personal relationship and development, but the ability to connect is going to have to be done digitally. And I really like what you talked about, the education, right? Because a lot of that is done online, and prospects want to do the research on their own and don't have to talk to a person, even though they might enjoy the conversation. At least initially, they want to do their own research before connecting with you, right?
Well, that's a great point, Brett, because more than ever, customers are better educated by the time the salesperson gets to them. And so really getting to that value proposition immediately, getting to how I or my services are going to impact your life, your company, your performance, that is the cut to the chase now with a better educated customer base, right? Back to that first point, salespeople are educating still, but it's around the value in the context of what the customer already knows. So the conversations, the salespeople have to up their game as well and really do their homework on what the problem is that they're trying to solve for, because there are competitors out there.
Yeah, no, you're right. I had an author, and she's consulted Diane Helbig. Her episode will go out here in a couple weeks, but she wrote a book on sales, or modern day selling, if you will. And one of the things that I like that her distinction was marketing is really about creating the awareness, but sales is now about the discovery, right? Is it actually a right fit for our product? Will they be successful if they use it? Which I know we've used discovery for a while, but that almost becomes more of a discovery and then help them get across the finish line, where, to your point, it used to be the full process, education, the salesmanship of it and all that good stuff. So I like to joke sales has finally caught up with me, because I'm not that hardcore outbound push used car salesman, buy now, time's running out. And it is really about the value and help and subject matter experts, problem solving, et cetera. Right? Mm-hmm. So awesome. And why this ties back into where I love to go with the podcast is, we look at B2B founders in the early stages. They're doing, if not all this, the majority of selling. And as they start to bring resources on to help with the sales process, I think it's really important to help educate them on, maybe there's not one way to go to market or help do that, but understanding the landscape. Again, not starting from zero, which I know is where our start to come, maybe a good transition into that piece of it. And I do want to circle back to 11.2 and why you started that. But I know when we talked a little bit about, you said all startups start at zero. And so how do we help facilitate that growth process and take some of the friction out and accelerate it? So, which perfect tying back to 11.2 and, exit velocity and all that good stuff. So that was a long-winded wind-up to ask you that question, but
no, that's great. It's good context. So as a founder, I am completely stoked about my idea. I love the concept that I have. And yet, if I haven't contemplated distribution, then I'm starting at a deficit, right? And so I think one of the areas for founders is really to understand exactly how are they going to get that product out into their prospects' hands, and what is that use case that's going to tip the scales to a conversion, to a sale, right? Distribution is so often overlooked because the product is sexy, the product is cool. People have poured their heart and soul into this thing, and then you have it. It's like, oh, well, now what do I do with it?
Right.
Who do I talk to? How do I get it out there? And so that lends itself, when we think about marketing, there's the broad message and the value, there's the digital presence, but then there are the influencers, and then there are the allies. And how does that startup founder start to look at not just that what is my digital presence and how do I activate that? But who are the people who are the one-to-many relationships that I can start to nurture and cultivate? Are they universities? Are they bloggers? Are they companies? Are they, corollary product offers that you can do joint webinars with, right? Like those non-obvious kind of guerrilla views of bootstrapping your way out into the market for the launch are all really critical to getting out there and making those first sales.
Yeah, I think that's such a good point. And yeah, I'm going to admit that, when I started the podcast a couple of years ago, I was pretty, we're all set kind of on our ideas, right, and approaches. And, definitely understood the value of the founder getting the product out, getting the traction, proof of concept. But then when you start to expand it, it was really more the digital. How do I reach people I can't get to today? Or if I bring in salespeople, that's still hand-to-hand combat. I'm not going to scale unless I bring in 100 salespeople and reach it. And one of the areas that almost every founder that I've interviewed had talked about was getting to scalable growth was once they broke beyond their network. They stumbled, they struggled. Some made it, some didn't, right? And if they couldn't reach those new audiences, then they either burned out or ran out of cash and didn't necessarily make it. So one of the areas that I'm seeing a lot of traction, I think you kind of just talked about with the influencers and allies, is leveraging partnerships and different channels that, I think there was a time that was a heyday of those, but then for whatever reason, it seems to be either the founders or CEOs of companies now wanted to be much more direct and control that process, where I'm seeing a lot of really good traction with some unique opportunities through different ideas of distribution. So I'd love to get your perspective on, kind of where that's at today and how should they be thinking about leveraging those types of opportunities.
Sure. With software, specifically in business sales, you have this concept of incremental cost. If I build it once, technically, unless I have a lot of back-end human support behind it, that software costs the same thing. It costs zero for every new customer. And that zero cost, and I'm simplifying it, but that zero cost for the new customers is an opportunity to create partners. And look, there's no .orgs in this B2B.com space. Everyone wants to improve their bottom line. They want something, right? And that incremental cost is, you could argue, a marketing budget that you can use to create and pay and form aligned partnerships with other companies or people and unite them around mutual success, right? That concept of alignment, I think, is often overlooked or trivialized, right? We have parallel products. Wow, you know what we should do? We should try a webinar together. Well, okay, that kind of makes sense, but am I really excited about that, or am I just looking at it from a joint interest perspective? Crazy thought. What if we split the profits from the deals that were tagged in that webinar? I don't know. The point is, with software, we were, as founders, creative enough to come up with that, groundbreaking concept. Why are we not being creative when we go to market? Why are we not being creative with how we structure these deals with our partners, our allies, our close connections that can be those one-to-many relationships? Because they're everywhere. It's just a matter of catalyzing them.
Right. No, I think it's such a really big opportunity in the world of fewer and fewer large companies and many more small companies or solopreneurs or small businesses. It's almost becoming more of an ecosystem than it is what the traditional channel or a value-added reseller would be. And even with my own business, I'm starting to explore some of those different opportunities where we've got shared objectives or alignment with what we're doing, where in the non-traditional sense, you wouldn't think of us as, potential partners. So I think it's a really good idea. And, it's probably a whole another podcast and episode we could do on that piece of it. But, I think it's definitely something the founders need to look at seriously. And to your early point, do it sooner rather than later, basically have a plan, right?
Yeah. And, you touched on a really important word, ecosystem. I think there's two ecosystems. One is inside the company itself or inside the customer itself. So that customer is taking a call or having a conversation about a founder's product for some reason. Well, what is that reason? Traditionally, we would say, oh, here's a pain point. But that someone in that work process before that customer inside that company created a demand. They want a better procurement software. They want something, right? And then once that customer buys it, once that user is actually in the system and using it or consuming it or doing what they're supposed to do with it, there's a downstream result as well. That's that internal ecosystem of the prospect. And to just sell based on one-dimensional value, where I say, hey, look, I've got this really good thing, it'll do these great things for you, you should buy it. That's great, and that's a table stake. You have to do that.
Right.
But to be able to say, hey, I know you're in this situation because your CFO has these demands. This is a day in your life, and this is a day in her life as the CFO. And I know once you're done with this, you're going to give it to product marketing or sales, and they're going to need it to be bundled up this particular way. And the procurement is going to help you do both of those things, right? Your upstream and your downstream ecosystem. Ultimately, as we think about the way we get our distribution out there through those partners, that external ecosystem around who are the key vendors or suppliers to that particular customer. How do we partner with them to get an in? What do we do, again, with this concept? It's not just, kind of side by side or closely aligned brands. It's also, hey, wait, that particular prospect is also working with these other providers that are out there that have nothing to do with what I'm doing. We're not competing. Let's have a conversation. Maybe we can start a non-competitive lead gen group to be able to walk each other into our various prospects, right? That's that bootstrapping mentality around getting it out there and getting outside of the founder circle.
Yeah, and I think that's such great advice. And one of the things transitioning from enterprise back to the startup space a couple years ago was, they are so set in their ways. They're so siloed. They only know one way of doing business. You may have some folks inside that are really trying to push and do things differently, but just processes, everything makes it really difficult. That's why I think there is the golden era of B2B is right now to go
Right.
disrupt the industry and just the way you're talking about. And I think about it as an ecosystem and how do we do it differently and ask the dumb questions, right? I know we've
Right.
never done this or it's not typical, but can we do this? Try it,
Right.
test it, right? So, no, I love that. And then if we look at transitioning back, or not, I just want to tie off on the one thing with the ecosystem. We talk about the multiple buyers. I always like to reinforce this with founders who may not be used to selling, right? Just within that prospect world, you could have, a buyer, a user, and the approver, right? As you said, CFO, probably risk mitigation is their number one priority, or how does it fit? And it's really not about crafting three different messages. It's creating the overall right message or approach to that's going to address each of their needs. But you can't really have three different discussions, right? It can't be, because then you're creating the same silos prior. I'm just curious your perspective on kind of that approach in selling into an ecosystem.
Well, I think there's the practical piece and then there's the practitioner piece. So the practical piece is it's important to understand, and I hope the beeping's not getting in the way outside. It's
No, not at
important
all.
to understand that the message itself has to exist without the salesperson. Because whatever I send to you, whatever I email to you, whatever words that I've used, even if it's a demo, frankly, unless you're the owner of the company or operating the BU or have that purchasing authority, you're going to have to talk to someone else about it. And to make sure that I'm arming you with the ability to go sell when I'm not there is really, I would say ecosystem awareness, right? This idea that, you may be the champion for this particular product, but I need to make sure that you're armed so that when you do actually get in front of those people, because even though they're inside of your business, they're still busy, right? Getting on their calendar is a chore or not very available. So that's the first thing is really understanding, that kind of ecosystem where I guess another way of saying it, your precedents and your dependencies are, who's going to be the job review, the
Right.
end user of, Kurt did a good job. And so understanding that in my sales pitch is really important. I think the other thing is when we think about the ecosystem, the other piece is line items. If I only compete on one dimension,
Hmm.
then frankly, I'm missing an opportunity to crush a deal, right? I don't want to be 51% over the line. I want to be 100% over the line. And so when we think about competing from a multi-dimensional perspective, there's the price, there's the product itself, there's the contract, like thinking about the contract as a product, and then there's the support. And to make sure that my proposal or my value proposition addresses each of those four areas is another good way of getting in front of that ecosystem, so that you have these four dimensions, and then you can say, oh, I've looked at Kurt's offer and he's talked about all four, but alternate co has talked about only two: price and features.
Yeah, no, I think that's really good advice, and I think it's often overlooked, right? Because if you can sell them on one piece, but there's the three other dimensions, you're putting friction in the process that you don't have to put in. So if you think about it up front and sell it as the package, it just makes so much more sense. And it's such good advice, especially if you haven't been in the sales world for a long time. And again, I think founders can make up for some of this just on enthusiasm and their excitement for
Right.
their product and be able to work through it. But as you start to look to scale the business, which is almost what everybody wants to do, these are going to become the more and more the factors, like the win-loss factors or the success or failure in some cases, right? If you can't solve or think like this, it's going to be really hard to grow your business.
Yep.
So
Yeah, without a doubt.
awesome. Awesome. All right. So I do want to go back to 11.2, and I keep wanting to call it 11.2. So correct me if I'm wrong if I do it. Why did you start it? I mean, I have a good sense just based on our conversation of, being able to grow startup businesses. But can you walk us back a little bit through, kind of the genesis of the idea for this and kind of the problem that you
Mhm.
were looking to solve? Because I think it ties in nicely with founders that are looking to grow their businesses. So without giving away the punchline, I'd love to have you dig into this a little bit.
Sure, absolutely. I've started a handful of businesses, and one of the things that I realized is that, at least from a venture perspective, there's an opportunity to create a factory around starting businesses. One of the mythologies around venture is that, that founder has to be in it all the way for their first company or for that particular company. If they're doing something else, then maybe they're not that good of a founder. The reality is everyone's got a side hustle. Everyone's doing multiple things. Even, some of the bigger names out there have 4 or 5 companies that they're the CEO of. And as I started to walk through, the different portfolio companies that I was building myself, I realized, holy cow, I have an ability to aggregate these 4 under one umbrella and then raise capital and give investors almost a diversified view of 4 companies. That was early on in the process. Now 11.2 is looking to build 50 companies. And out of those 50, we're looking at, anywhere between 20 to 40 joint ventures. And so it's a much larger perspective on what it is. And what we're doing is, if you think about the way a product works, right? You have a product, but then you get another product. And then pretty soon those products, they aggregate into almost a concentration of services. But
Right.
that, you can either say, well, that's the definition of my company, or you can say that's platform. And that platform can be reapplied to other areas. And so what 11.2 is doing is it's taken this concept of a corporate development shop and said, you know what, we're going to be a venture builder studio. And so we're going to build these particular companies. We've got a platform. We're going to only build companies that make sense around building a platform so we can take it, and sell it to a whole different industry. We've got one company called Perceive, which is business model simulation, right? It gives executives certainty around how they're going to grow based on their investment in staffing, their investment in marketing resources, their sales process. And it basically says, hey, look, this is the certainty. If you do it this way, that you can actually hit these particular numbers. Well, if you think about the sales process as a supply chain and a manufacturing process, where each stage in that sales process is that requires different resources. I need a systems engineer, I need a manager, I need legal at the back end of the process, right? That's a factory floor. And when we talk about perceived from a B2B perspective, it is helping on, that how do I grow and what do I do? But it's supply chain. And so when we think about it as a throughput model, here we've built this one thing, which is B2B sales, and we can apply it over here into these other categories. We can look at, inventory throughput. We can look at process improvement, right? Any of those different dimensions. It doesn't have to be revenue. It doesn't have to be marketing expenses. You just plug your own numbers in there based on what sort of throughput you're actually trying to model. And that's what I mean with 11.2, we're building around these platforms that can be repurposed into other sectors. Because back to that marginal cost, if you build it once you've built it, the incremental expense to sell it again or cut and paste and sell it again is only whatever is bespoke for that particular industry.
Yeah, I mean, I'm absolutely fascinated by this because I agree. I mean, it started a few years ago when I thought, man, why is B2B sales the last of the wild, wild west, right? Your approach, your methodology changes every time you bring in a new sales leader, right? He or she's got a way of doing business. But the fact is, I think that entire go-to-market is a platform, right? You may have different, going into different tactics within it, but I've always kind of thought the same thing, like we used to look at the old shared services, right? The back end, we can share and do this for multiple businesses because it's the same idea. But where I've kind of come around is, right, a lot of these businesses don't make it. It's not an idea problem. It's an execution problem, right? And you're not executing 100 different ways. You may do certain things with different tactics, but at the end of the day, the process, you're right, is still going to kind of be the same, kind of like what they used to do with manufacturing, then it was supply chain. So it just makes sense to me what you guys are focused on is on the go-to-market aspect of this, of why can't we replicate and repeat and drive the economies of scale, right? Have I got that right?
Yeah, that's exactly right. Profit and loss haven't really changed that much
Right.
over the years. And so we're back to distribution and we're back to execution. And under what conditions can I actually hit my numbers? Under what conditions? And can I even afford my numbers? Like, these are really interesting questions, right?
Yeah.
This whole concept of in sales of try harder just really doesn't work. And no matter how much coffee or Red Bull is handed out to the team, unless you actually change the process or change one of the inputs, the results are more than likely, if you back out luck, going to be the same.
Right. No, so true. And I'm curious from your perspective on, I guess, two pieces. That one is, the ideation, right? A lot of these startups in the B2B space have started from somebody that's come from the B2B space, couldn't get their problem solved. So now they developed a product or solution to help solve that problem. So with your approach, where are the ideas coming from? I mean, I completely get it to build and execute, but where's the genesis of the initial concept for each of the businesses or products?
Yeah, so we have a handful of three general areas. The first is our investors and our advisory board, right? These are people who are at minimally they're accredited investors. And so they have a certain, financial profile that the SEC has dictated that allows them to invest in alternate assets, which essentially means that they're in-seat executives. They're individuals who Darwinianly have grown up through organizations, created wealth, and have also stayed there in those particular positions. So the ideas that they generate come with product market fit already. The second is we've got a technology transfer group that looks at IP from some of the larger research universities. And so we think about how can we take this and license this and this IP and create a B2B solution? Is there a problem out there that's big enough, for this? And then the third is, more recently we started working with, government organizations like NASA and NIH and things, groups like that, where we're again looking at that tech transfer. And it's the business lead. We have 5 different segments that we're operating in. That business lead is the one who says, oh yeah, we need to cherry pick from that one and that one and that one and come together and pull those ideas out. And then once we get those ideas, we've got, again, back to that factory floor, we've got a manufacturing process for vetting those ideas, walking them through their evolution. Is it a good idea? Your phase 1 would be the usual venture questions. Is it a good idea? Does anyone care? Are there enough customers? Do we have distribution? And then you move into prototyping. And if it survives that process, then you move into the next process until it graduates with an MVP. Our definition of an MVP is, frankly, a handful of customers and a first dollar of revenue. So we don't just want something that works. We want something that's someone.
And then what's the exit strategy? I'm sorry, I didn't mean to cut you off again.
No, that's fine.
So for these companies, get the idea, you grow them to a certain level and then spin them off or sell them into a corporate partner, or what's kind of the longer term vision for these companies?
Yeah, because 11.2 Ventures is not a fund, it's an operating company. You can almost think of these as wholly owned subsidiaries. And what that means is we have control over how we exit. One of the concepts that I think I learned when I was in corporate America was that some of these products that are manufactured are just that. They're products. They're product line extensions. It's like, oh, look, I've got a new module in my software, whatever it is. But others grow so big that they turn into separate divisions. And that's where I think in venture, we have an opportunity. 11.2 has an opportunity because on day one, we don't know if the entity that we created is a product or if it's a company. And if it's a product, we're not going to throw money at it. We're going to find a home for it. We're going to sell it. And because we've got 50 companies that we're building and then, the JVs, we have almost a normal distribution. We have enough in our portfolio where we can be opportunistic about how we sell. And conversely, that entity that we've created looks like it's got scale and it can actually grow to be a company, then we'll hold on to it and we'll invest more scale revenue and take it to its next inflection point. And so what we have as 11.2 is this ability to really see and be opportunistic based on our overall portfolio, as well as the attributes of that particular company. And there's no harm, no foul with a company just being a product.
Right.
There's nothing wrong with that, right? You can crush it in the market and be the most awesome product ever, but that doesn't mean it deserves more scale revenue or investment. That just means it's looking for a home, at least in our parlance.
Yeah, no, I think it makes a ton of sense. And I had Shark Tank winner on the podcast a number of episodes ago. I wish I could remember offhand what number it was, but Martin Hill invented a product. He basically scaled this thing through, I think he had one part-time person helping him in his home office coordinate, but he outsourced manufacturing. He outsourced everything. And when I actually interviewed him for the podcast, he actually announced on the show that he was selling his company, right? Because he realized he was a designer and a visionary and a product guy and he didn't want to run a big company. So he kind of, subscribed to your philosophy that said, hey, there's other people that'll do this much better than I do. That's what they want to do. I've already got a couple more ideas that I want to work with. So it makes sense. I'm just curious and more devil's advocate here, just because the number of people I talk to, because there's going to be some products or ideas, that you think are going to solve a problem and may or may not. And maybe too quickly you say, no, this isn't going to work. Where if it was a traditional, what I would say, air quotes, traditional founder, right, they may pivot 2 or 3 times until they actually get to what that right solution is because they're passionate about it. Where if it's more of a, hey, we're building this. I guess with the scale you're looking at, it's not going to matter if a few of them get washed out because didn't have the passion to take it a little bit more further than maybe what the business said that you should have. I don't know if I'm doing a very good job of asking you the question, but do you see where I'm going with that?
Well, yeah, and maybe I'll come back to you with it in a couple different concepts. So bravery is the stupid stuff we do that works, right? And
Yep.
between passion and pivot, when it works, it's awesome. It's like, wow, that founder did a great job with her passion and her pivots along the way. And look, they just exited, and that's great. But that outcome isn't predetermined, right? There's no guarantee around that. And so when we flip it into the negative, it's called founder bias, right? And that founder bias, otherwise, I love some of the classics, and it's just, you get your Captain Ahab on, and you're going to get the whale until it kills you.
Right. It
Right?
works until it doesn't, right?
It works until it doesn't, exactly. And so the problem is you never know, right? What we've done is essentially said, look, we're going to take founder bias out of this picture. We're going to build these companies, and it's not that we're avoiding it. It's that on the one hand, we have a commitment to build great products and great companies. On the other hand, we also can look at it clinically and say, oh, well, the duration is this, the product fit is this, and the inflection point for growth is this. It's probably a good time to find a home for it, right?
Yeah. No, I mean, it makes sense. And it just kind of curious because you hear those as a 10-year overnight success and those types of things. And I do think there's always going to be a place for those folks. But I think to where your point was, we can factor out a lot of that, right? And take some of I love the founder bias. It's so true. And most of them are walking a fine line, right? How far do I keep going where it's just never going to work? And we probably should have pulled the plug a long time ago. So probably for every one, I have no idea what the math or the science says, but for every one that pivots 2 or 3 times and perseveres and overcomes what most people would have said stop, maybe 10 don't make it because they followed that same path. And what you're trying to do is just, hey, flatten the curve on this. We know there's a real problem out there. We've got a solution for it, and it's either going to be product driven or we're actually going to build a full company out of this to go attack that problem.
Yeah, and I think the other element to founder bias that is really a very personal yardstick or meter stick is, what is my growth objective or exit objective? Do I want to be a unicorn? Well, that's a 7 to 15-year project, right? Lots of issues along the way, right? Do I want to sell for 100 million, for 50 million, for 10 million, for 5 million, right? What is my walk away from this business? And I think it's okay to have those conversations with oneself as that founder to say, look, if everything goes to hell in a handbag, I'm not going to be a unicorn. I'm not going to be $50 million exit. I'll be a $3 million exit. I'll have to split that 3 ways with my partners. So I'll walk away with, a gross $1 million. Is that bad?
Tax.
Right. And so to have those conversations and almost plan out while you're planning your distribution strategy, plan your exit strategy. Like, what happens when we hit this break points and we get an offer? What about these break points? What about this, these milestones? Like, what happens? Because otherwise we're reacting and we're not. Hindsight's 2020. So unless we've planned for some of the possibilities, that's the only way to go into the future eyes wide open, I think.
Yeah, no, I think that's right. And one of the stats I use all the time in this program when working with founders is, the reality is that less than 5% of the startups will ever reach $1 million in revenue, and less than 1%, I think it's like 0.8%, reach 10 million, right? So even trying to become a unicorn has got to be 1/10 of 1%. And even if you do everything right, there's a lot of luck that's going to go with it to create that unicorn type product. So, just the fact of getting them over the $1 million and $10 million threshold would be, should be considered a win. And, again, some people just want the lifestyle business and will run it, 800,000 with good margins. 100% all day, do that. Good for you. It's really when you want to think about building the company with, employees and scale, then, there's, the process is going to be critical to getting to that point, right?
Yeah, without a doubt. And it's important to think through these things, at least have thought through them a little bit as well.
Yeah. And just kind of curious, because we did have general partner from a B2B VC fund, early stage seed, and they talked about who they invested, founders they work with. Is there an opportunity? Hey, I'm a B2B founder. I think I've got a great idea, but I don't know if I necessarily want to go through everything that we kind of outlined. Will you work with or talk to founders? Is that where the JVs come in, or is this really more an internally driven process? I'm just kind of curious from because I think this is a really cool concept. I'm just curious to see, where and how, if there are other founders that don't want to go through that, 10-year overnight success and think they have something. Is that something you're working with individuals, or are you really driving it still through an internal process?
Most of it is internal, although we do talk to founders.
Okay.
So, it's arguably the reason most of it is internal is because we start these companies at 100% equity and zero valuation. It's an idea. We own the
Right.
whole idea, but it hasn't done anything. And then by the time it hits MVP, we have somewhere between 80 to 90% ownership in that company.
Got it. It would make sense for the model. So, no, I mean, I think definitely the big takeaways for me, or a lot of them is, and you've reinforced some of what my belief was, it really is about execution and scale. And I think if you're a founder looking to grow your business and, don't want to give away 90% equity, right? There is a play, but you guys kind of have the playbook of how to grow and scale a business. And a lot of it doesn't have to be, gut feel or one-off type of an approach. And you've said this a couple times, have a plan, right? Have a plan early on. Think about distribution before, maybe not too deep after you sell a couple customers to get the MVP, but think about it early and often, how you're going to be able to get this product to market and scale it versus waiting until you get to that point. And I've seen that could be a 12 to 18 month window if you wait to think about distribution until you're at the point where you need to think about distribution, right?
Yeah, it's kind of like raising capital. Don't raise it when you need it, right? And there's three C's that I kind of live by: customers, connections, and capital, which lends itself to, I think, the creation for those early stage founders of an active advisory board, not a governance board, but an advisory board that's going to help them get customers, connections, and capital. And I apologize if there's background noise here. So
No, that's the charm of this podcast. It's real people having real conversations. And I've never actually heard the three C's before, so I'll use it and of course give you full credit for it whenever I reference it. But that makes a ton of sense, right?
yeah, and there's another thing called board fade, which, I mean, these are just the frustrating things that I've gone through in the course of getting into venture. You get all these people on day one who are like, Kurt, you got a great idea," and then 3 months later, there's not 10 people, there's 6 people, and then at 12 months later, there's 3 people, and then they're gone, right?
Yeah.
And so finding a board that can get you those three C's, and then using things like options or some sort of program that vests over a 3-year window usually, is a great way of making sure that they stay engaged, that if they do leave for whatever reason, people's circumstances change. They get married, they decide to move to a different country, whatever the reasons, right? The fact is, 3 years is a long time. And so those people who stick with you for 3 years as a founder should be rewarded for that. And those people who fade, no harm, no foul, but can go do their own thing. But at least you haven't diluted your company on a 3-year term. You've only diluted it for the time that they've actually been there, right? So really finding that advisory board for the customers, the connections, and the capital, and then making sure that you reward them however that reward needs to show up, because you want to engage hearts and minds, but then also that you're limiting your exposure.
Yeah, no, and I like the idea of three. I've worked with some companies where their vesting is 4 years, and that's an eternity in, right? The
Yeah, right.
startup space. So I like the 3 year. Have you seen anybody do 2 years? Is 3 years kind of where you would recommend?
It's situational. I mean,
Yeah.
I've done year because it was a very specific task.
Oh,
It
gotcha.
was, hey, let's go see if we can do this, and I need your help doing this particular thing. But long term, where the company's going to be in 3 years is not where we need that skill set right now. So these are really tools, and if we just follow the rules, then it's one size fits all. But that's not what it is, right? The,
Right.
the company on day one is going to need a whole different skill set than the company on day two, right? In year three. And so I'm going to need to arguably swap out some of the advisory board members.
Yeah, no, it
Not
makes
because they're
perfect sense.
bad, but because they're really good at that thing over here. And I need people who are really good at this thing over here. And so let's figure out how do we do that in a way that really engages hearts and minds, right?
Yeah, no, I love it. And I think it's perfect sense. I've actually written about kind of the three stages of growth and the needs and what the founders need to be thinking about at each of those stages. And it differs, and who you want to partner with and have part of that conversation is going to dramatically differ based on where you're at. You can't get through the first stage, 2 and 3 aren't going to matter, but you do need to
Right?
be thinking about it from day one that, hey, if we're getting close to this milestone, it's deploy this versus, all right, let's have a conversation, start to think about who we want to do. It's like I tell my daughters, plan for the worst, hope for the best. But if you don't have a plan,
If you
forget
don't
it.
have a plan.
So
Yeah, and it begins to come together, right? If you have those conversations with your team or yourself about, well, what are my break points? If I hit this number, what would I accept? If I hit this number, what would I accept? If I hit this number, what would I accept? Well, then that informs how you're structuring your advisory board and how you're compensating them or rewarding them for their help. It all begins to align around what is the purpose of growth? How are you going to grow? What is that, full or part-time or advisory team that needs to be assembled to hit that particular milestone?
yeah, that's so good. So good. Well, Kurt, I want to be respectful of your time, and you've been very generous so far, but I do have two last questions for you that wrap this up. One is, what's next for you in the, call it Q4? We're still early in Q4 at this point. What are you guys focused on? Just still ramping up and driving venture? Where's your focus going to be here in the next few months?
Yeah, we have two more companies that we want to fire up this quarter: computer vision and freight and econometric modeling. So we're pretty excited about those. We've got a whole bunch of customers that we want to bring on board with our portcos. And then, after these 8 companies, we have 42 left in the next 4 years to get
That's
out the door.
aggressive, man. That's but like anything though, right? Once you get the few through the process, then everything just kind of accelerates. You work out kinks and continue to refine it. So, and we'll have to have you back on maybe in a year just to touch base to see where you're at in the process. I'd love to get a kind of status update and update the
We love it.
audience of where it's going. Cause I think, like I said, it's different, and I love the fact that it's different, but it's so logical. Right?
Thank you.
So yeah, I'll make sure we get you back on to do an update. And the last question I ask everybody is, what is one thing that you would highly recommend? And it could be personal or professional.
Well, I was going to come up with something like super smart. And I think what I've observed with my own behavior is just this connection to the world. And what that means is not, meditation, although I would recommend that. I watched the sunrise this morning. I got out and I walked 3 miles when it was dark. And then when I came back, it was sunny and just feeling the wind and the sun and watching the change in the sky. I mean, it was such a reconnection because we live our lives so much in this digital space. How much does a company weigh? Like, perceive. It's digital, it's SaaS. Like, I don't know. I don't think it weighs anything. But the stuff out there weighs something, right? We can feel it, we can smell it, and that reconnection with the world is just a good thing to do in this COVID time.
Yeah, or any time, to be honest with you. But you're right, especially in COVID time. No, I love that, and 100% agree. I actually thought about that's what I'm doing sometimes, but it's just getting out, give yourself a chance to think, appreciate what's going on out there, and then business isn't going anywhere, right? So
That's right.
take
Exactly.
awesome. Well, anything else, Kurt, before we wrap this up that we didn't touch on today? I think we covered quite a bit of ground for sure.
This is great. I appreciate it. I'm honored to be on your podcast and look forward to connecting again.
That's awesome. And then one last thing, we'll add it to the show notes. If people are interested in learning more and connecting with you, which I'm sure they will be, what's the best place to connect with you?
Well, the 11.2 website is 11-2ventures.com. And I think I'm listed on there. Otherwise, it's just Kurt at 11-2ventures.com.
Awesome. We'll make sure we add that to the show notes. And Kurt, thank you again so much for joining us today. I'd like to bring some fresh perspectives, and you've absolutely done that for us.
Thank you very much. Happy Tuesday.
Yeah, you too. Have a great rest of your day. Thank you.